Polygon recently went down, Binance market closed users' positions in Australia, and Coinbase just dropped a major announcement. This is your Altcoin Buzz news. Hey, what's up, everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when we drop our latest content. Follow us on Twitter at AltcoinBuzzIO, and as always, this is not financial advice, and we wish you the best of luck in your crypto ventures. Yesterday, Bitcoin rebounded from the day lows of 23,600 all the way up to 24,600 after the FOMC minutes came out. According to the minutes that were made public, almost all the officials at the most recent meeting of the Federal Reserve supported a hike of 25 basis points, with the exception of a few officials who supported a 50 basis point hike. Almost all participants observed and agreed that slowing the pace of rate increases at the current juncture would allow for an appropriate risk management. The Federal Reserve is expected to have its next meeting in March, and on March 22nd, it will announce its most recent interest rate decision. Until then, investors are focusing their attention on statistics pertaining to inflation and jobless claims, with the Personal Consumption Expenditures Index report coming out tomorrow at 8:30 EST. This morning, Coinbase announced they're launching a Base, an Ethereum Layer 2 network offering a secure, low-cost, developer-friendly way to build decentralized apps on-chain. Base is designed to deliver the security and scalability of Ethereum at a fraction of the cost. It's built on the Optimism stack so that it can remain decentralized, permissionless, and open to anyone. Base will serve as the home for Coinbase's on-chain products and an open ecosystem for anyone building Ethereum scaling solutions and dApps. They want Base to be a seamless gateway for Coinbase users to access the broader crypto economy, ultimately making Web3 more accessible to a greater number of people. Base makes it easy to build decentralized apps with access to Coinbase products, users, and tools. Seamless Coinbase product integrations, easy fiat on-ramps, and powerful acquisition tools enable developers to serve the more than 110 million verified users and access to $80 billion of assets on the Coinbase ecosystem. Base offers full EVM equivalents at a fraction of the cost and is committed to pushing forward the developer platform. They say, "We're designing Base to provide easy, secure access to Ethereum Layer 1s, other Layer 2s, as well as other Layer 1 ecosystems like Solana. We encourage them to start on Base, but go everywhere. We see Base as a bridge for users in the crypto economy. It's an easy-to-use default on-chain experience with access to products on other chains. Along with making Base interoperable with other chains, we'll continue to support as many chains as possible across Coinbase products." They say, "However, we know the growing crypto economy cannot be accomplished by a single entity or company. Decentralization and collaboration are critical for the long-term success of Base and scaling Ethereum. That's why we're working with OP Labs and Optimism Collective on a plan to scale Ethereum in a decentralized way. Our vision is to create a robust developer ecosystem of interoperable Layer 2s and rollups that'll help onboard the next billion users to Web3. They also stress that they do not plan to issue a new network token for Base and will use ETH as its native gas token. This morning, Binance users in Australia reported that their trades were all market closed, losing lots of money due to Binance Australia's derivatives closure. Binance said, "Our team identified a small number of Australian users who were incorrectly classified as wholesale investors on Binance. Trading in cryptocurrency futures is only restricted to institutional and high-volume investors on the Binance platform in Australia. An examination of the onboarding procedure was apparently what led the crypto giant to find the mismatch. These accounts, which had been mislabeled in the beginning, have since had their positions closed." Binance said, "As per the Australian regulation, we were required to inform these users and close any of their own derivatives positions with immediate effect." Binance CEO soon after tweeted, "Users will be compensated for any losses incurred due to the forced closing of positions. Protecting users is our number one priority, and we will review the situation to see if and when we can reopen futures offerings in Australia." And due to regulations in the UK, Binance had to also close its Binance Earn features for its users in the UK, stating, "Binance constantly evaluates its product and service offerings in line with its commitment to compliance. Binance Earn products like Simple Earn, DeFi staking, ETH staking, BNB Vault, and liquidity farming will be restricted for users in the UK effective immediately." Decentralized storage network Filecoin's native token FIL has been rapidly rising due to the anticipated launch of the FVM, soaring from just above $5 a week ago to $8.47 yesterday, a more than 65% gain. There are many reasons why China prefers Filecoin, for example, its uneven domestic investment landscape and rigid stand-on capital controls. Filecoin's association and storage mining tag makes it attractive to the Chinese community. Filecoin has outperformed Bitcoin and Ether, which have risen 5.5% and 3.2% in the past 7 days. Meanwhile, the price of Filecoin was trading at around $8.47, up by 55%. Remaining strong at the 22nd position of top cryptocurrencies, the trading volume has also increased by 62% in the last 24 hours, indicating an increased interest among traders. Our partners at Wanchain have just launched their ETH X-flows, allowing native-to-native cross-chain transfers of Ethereum on Arbitrum, Ethereum, Optimism, and Polygon. Ethereum's unmatched adoption has often resulted in a congested and expensive network. In response, several Layer 2 networks and sidechains have emerged, most notably Arbitrum, Optimism, and Polygon. Each of these Ethereum scalability solutions provide in-house bridges to move ETH to and from Ethereum. For a variety of reasons, these bridges, while secure, are slow and expensive. Considering these challenges, a better solution is urgently needed, and luckily, Wanchain's X-flows present an ideal solution. ETH X-flows is a decentralized cross-chain solution that enables native-to-native cross-chain transfers between blockchains that settle transactions on Ethereum, and where ETH can be said to exist natively. X-flows leverage the power of Wanchain's cross-chain bridges to provide easy, non-custodial transfers between chains without the need for centralized exchanges. The Polygon blockchain ran into trouble on Wednesday after some of its nodes fell out of sync, causing a cascade of problems that hamstrung performance and knocked popular blockchain explorer Polyscan offline. The interruption on Polyscan created the appearance that no transactions were taking place. At about 8:26 UTC, a few nodes went out of sync. This caused a reaction where some nodes could not validate blocks for a very brief period of time. The spokesperson said all nodes have come back into sync, and Polygon is investigating what caused the issue. Polygon's troubles appear to have stemmed from an unusually large block reorganization that occurred 2 minutes before Polygon said nodes went out of sync. When operators of a network publish 2 blocks at once, it creates a fork in the chain, which there are dueling accounts of the chain's permanent record. A block reorganization is how the network resolves the discrepancy. It excludes one of the records in favor of what the network deems the correct one. Small block reorganizations are common on Polygon and other networks based on Ethereum Virtual Machine, and they're not necessarily cause for concern. What was different on Wednesday was the size of the reshuffle, 157 blocks. The reorg was definitely outside the normal size for Polygon reorganizations. The Polygon spokesperson said the network issue caused Polyscan to get stuck because the block explorer utilizes nodes that had fallen out of sync. Hedera has just announced its launch of Unthink AI, a first-of-its-kind Web3 e-commerce content creation platform leveraging the power of artificial intelligence and Hedera to streamline advertisements. Hedera's development arm, the HBAR Foundation, announced on Thursday the launch of Unthink AI. The new decentralized application is an e-commerce content creation platform for Web3 that makes use of the Hedera token service to run its operations. It also makes use of capabilities of artificial intelligence and real-time personal algorithms to streamline online advertising. Hedera will be able to assist companies in reaching prospective customers in the appropriate context, such as on content or gaming websites where they spend the majority of their time. For instance, a person searching a website for hiking destinations would come across an article offering advice on hiking equipment. By utilizing the Hedera token service, Unthink is able to provide content creators and publishers with tiered advantages via NFTs that function in a manner like loyalty tokens. An NFT is awarded to the creator for actions such as producing new content, generating sales, driving traffic to the brand's website, and similar activities. This token can be used to claim incentives from a variety of partners, including companies, agencies, and publishers. In the not-too-distant future, Unthink will also make it possible for businesses to construct their very own NFTs by utilizing the platform. This will make it possible for brands to build their very own communities centered around their products. That's it for your Altcoin Buzz news update. I'm your host, Cody Buffington. Thanks for watching.